important headline that we're tracking today. Now, all eyes are going to be on the RBI this week, which is widely expected to hold rates steady. Now, a Reuters poll shows that nearly 3 out of 4 economists see no change, though a few still pencil in a 25 basis rate point cut. Now, the consensus now is that any easing will come only in early 2026. Varun Arora, my colleague, is here to take us through what the expectations are as far as the street is concerned.
Reuters poll indicates RBI is likely to maintain its policy rate at its October review. About 74% of economists expect no change as compared to the 77% in the previous survey. Expectation of rate cut have been shifted to the next year of 2026 Q1, as though a small section of economists still expects 25 basis points of rate cut in October. According to Novama, while weak demand, steep tariff and benign inflation argue for rate cut, however, it expects the RBI to hold rates steady in the upcoming policy, as the GST rate cut could be offset by the slower government spending amid weaker tax collection and higher tariffs.
Thank you so much, Varun, for getting us all those details. But we caught up with the economists to understand the scope of the rate cuts for FY26. They believe that there is a potential for rate cuts in the December meet. Let's listen in to what's their rationale.
Wait and watch and see how the GST impact on the festive related spending, how all of this is going to play out, how the tariff related uncertainties are going to play out in due course. And probably from December policy or February policy, we see room for rate cuts, which probably could be to the tune of about 25 to 50 basis additionally.
We are in the camp of expecting the RBI to actually, pause at this meeting. Certainly, there are conditions for which they, especially if you talk about growth. So growth has been quite strong, wasn't quite strong in the first quarter. We think the second quarter growth could also be 7% plus.
Growth data that we've had between the last policy meeting and this policy meeting hasn't really shown any renewed weakness. On the one hand, the 50% tariff is hurting growth. But on the other hand, all of the tax cuts that we've seen, income tax, GST, that's adding to growth. So overall, the two are crossing each other, and there's no renewed reason on the back of growth to really give a rate cut in October.